right, welcome back. Bruce Porter joins us now for this week's Dollars and Cents. Ready to make sense of those dollars?
We'll try to.
S-E-N-S-E-N-C-E-N-T-S, both.
That's right.
You can do both. All right.
That's right.
Got a question for you, and
right,
here it
here we
is. I am recently being forced into early retirement due to a health issue. I was told that my disability income I will be receiving is tax-free. However, when I received my first check, I noticed that a percentage had been taken out for taxes. Any info would be helpful. What do you have to say to this viewer? What's the answer here?
So let's talk about disability income versus taxes. All right. So here's the deal. Social Security disability normally is not taxed, right?
Okay.
That's what everybody assumes, unless your income is too high, so including investment income. So it is a tax-free benefit or a non-taxable benefit as long as your other income is under a base amount, okay?
Okay.
So Social Security is not normally taxed unless you have higher income. Individual disability income insurance. So if you buy a disability policy,
insurance policy. Mm-hmm.
It depends on if you use pre-tax or after-tax dollars. So normally it's not a taxable income stream because people are using after-tax dollars. Mm-hmm. Now, if though you buy a supplemental plan along with your employer-sponsored plan, then it gets a little confusing. It really depends on who pays the premium. So if your employer buys disability income for you and you buy a supplement to go along with it, the portion that your employer is paying for, if you receive benefits, will be taxable. So I assume that this portion of her or his benefit
was probably paid by the employer.
An employer-sponsored plan. Now, and that goes along with cafeteria plans, because you can buy benefits through a cafeteria plan. The real simple answer is it depends on who pays the premium, all right? VA benefits normally are not a taxable income stream. Military benefits, though, disability, are normally taxed unless there are exceptions for active duty disability. So it really depends on your circumstance when you're drawing your disability from the military. Federal employees, forget it, it's taxed and until you're at full retirement age, and then it's taxed as a pension. So the real question is, if I'm gonna be buying disability insurance, should I use pre-tax dollars or after-tax dollars? Pre-tax dollars, when you receive your benefit, it's going to reduce your taxable income.
Sure.
Right?
Right. Yeah.
So your benefit is going to be taxed. If you're using after-tax dollars, your benefit is going to be tax-free.
It's a little bit like a Roth versus a conventional IRA.
Yeah, you got to know the rules.
If you think of it that way, okay.
So if you're going to plan on using your disability income insurance policy, which how do you determine that? You probably need to use, if you're never going to use it, you need to use pre-tax dollars because you'll save a little money on the premium on the tax. But if you're planning on, I guess, using your disability insurance, which who knows if you're going to need it or not, if you use after-tax dollars, your benefit is tax-free. So the simple answer is talk to your tax people.
This is a conversation to have early on because, man, you don't know. There are people who plan or try to plan for everything, and I suppose there's something to be said for, not something to be said for, but some people can overplan.
Absolutely.
Is that right? I mean,
disability insurance is one of the last things people think about, but it's one of the most important things if you're 55 years old and now you can't work because you had a health issue. Now, how do you replace your income? You're too soon to be on Social Security, so your only resort is to rely on Social Security disability. That's not going to pay the bills you're used to paying with your ordinary income.
So is it a good idea to get that then?
It is. I mean,
if you can opt in once a year, you have your open enrollment, maybe you can choose those little
Absolutely.
benefits?
If it's available on your group benefits, I strongly recommend it. Do people go outside of their group benefits and buy it? Not. I don't see that a lot. Is it an essential type insurance that you should consider? Yes, it is. Disability replacement of your income is a priority. But then again, so is protecting for long-term care and death, premature death. I mean, life insurance it's all important, but you do have to keep it in perspective.
You do have to keep it straight, which is really, really difficult to do, especially when you open up the form and you see that something's been deducted, and then you have to call and figure out what the heck just happened.
That's right. So in her case, that's probably an employer-paid plan that she's drawing on now, and it was a benefit that they gave her, and now she's receiving it, so it's going to be a taxable event.
And she benefited on the front end. Don't forget that. So if you're watching, call the company you work for and say, hey, let's just straighten this out to make sure I understand how this is working.
Call that provider.
Interesting.